Hi, folks. Coming back to you again today. A second video. I wanted to update you on a couple of things. Today is October 12th, and let me get this out of the way. I didn't do it. Number one, if you haven't subscribed, please subscribe. I talk about Humbl a lot, that's true, but I also talk about other things, as I did earlier today when I talked about INMD and their revenues jumping. You can follow me, again, email me there. You can follow me on Twitter. And that's pretty much it right now. I had something else on my mind. I wanted to follow up on a couple of things. Number one, someone asked me if I would be doing a video on ILUS, which I did mention the other day, and a number of people have been following that. So what I would say is I'm going to keep an eye on it. I don't have anything major to talk about today, but as we take a look at it, and the market, as I record this, just closed. So you can see that at present, it went up today, went up about 4%. It was up 7% earlier in the day. You can see that here before it sold off. The volume today was about half of what it normally is. So while it went up 7% earlier in the day, while it closed up about 4%, I am not, it is what it is, and I think that's just moving on speculation. I think ILUS is an interesting company. Here's a 5-day chart, and this is part of the good news and the bad news. The bad news is, I have to lean over here to be able to read these small numbers, that you went from like 26 cents not so long ago to 46 cents. So we had a significant move. And I think just as we had with Humbl earlier in the year, where we had a lot of speculation and enthusiasm and it got ahead of itself, Humbl did, that could be a danger here. Now, ILUS is a company that is an M&A, mergers and acquisitions, which means they're going to be buying companies and bringing more companies into the umbrella of ILUS, which means that they're going to be growing their sales. Let me throw out a little jargon here. When Wall Street says we're growing the sales organically, that means internally from our own sales as compared to going out and buying a company. So this company, as their CEO, is intending to go out and do more deals, and therefore their revenues could grow over a period of time significantly. Or maybe they won't. I'm not saying they will. I would say, look, there's a reason I haven't spent a whole lot of time investing in penny stocks over the years. And that's because you get a lot of bad things happening in penny stocks. You get some good things too, but you get bad things happening in penny stocks that I don't like. You get a lot of the market manipulation. You get the newer investors who are expecting to get rich quick. They think the stock is supposed to go from nothing to something in a short amount of time. Now, having said that, ILUS is a company that, yes, had any of us known, that this stock was going to go up to 40 cents or so, we could have invested $1,000, back in the early part of the year, and that and bought 1 million shares for $1,000, and now that would be worth almost $400,000. That's the good part of a penny stock. The bad part is that people think that's how it's supposed to happen, and it isn't. And as we see with Humbl, Humbl is, got ahead of itself and then came down, and now a lot of investors in Humbl are saddened at that fact that the stock is down to 70 cents. there could be somewhat of a retrenchment with ILUS. My thoughts at this point are this. I like, given that we have this parabolic rise and that we didn't see a collapse in the stock price, instead we saw it kind of flatten out here. There was a small dip, but not much. That's unusual. As I've said many times before, when you get a stock that goes vertical, it almost always falls back on the same kind of an incline. So this is nice here. I would say this. I would take a position with money that you, as always, you don't need, to pay the rent or to make your mortgage payment. At 39 cents, you could buy 1,000 shares for let's call it $400. You can buy 100 shares, you can buy 1,000 shares, you can buy 20,000 shares, whatever you can afford. I would take a small position, in part because it's sitting in your portfolio then, and you're going to keep an eye on it. And then if you want to buy on an ongoing basis, piecemeal, buy 10 more shares, 50 more shares. Folks, if you got a bunch of money, you can do what you want. I'm trying to say this in case you get some of the newer investors who are trying to learn the ropes, and I don't want them to sink all their money in any one stock, and I don't want them to sink all their money in at one time. You're better to buy in increments. So maybe you decide that you're going to put $50 at a time into this. You can buy $100 right now for, let's call it $40. So, for that kind of a price, go ahead and put something in. And if this is a company that ultimately does take off significantly, you'll be in it. So that's my advice on ILUS. On InMode, we closed, which I did earlier today before the market closed. We closed at $75.44. It was up at 1.10%. It closed up 8.62%. So you can look at the video I did on InMode earlier in the day, and that had a nice day based upon its surging sales. Now, I also had someone write to me, and I took the time, since I took the time to write to them, I wanted to share. Again, if you want to write to me, that's where you do it. MONEYandPoliticsNow@gmail.com. Let me just share, I'm not going to read the entire response, but the person said, would you give me your thoughts on Humbl and if it will go back to its pre-reverse split levels, or was it just a quick pump and dump, as he says, like forwardly seems to be? Well, I don't think either forwardly or Humbl is a pump and dump. Despite what some people would say, and this is why I wanted to address this. As I just said, when you deal with penny stocks, you get a different breed of investor, and you get some of these people who are snarky, and they're like, well, this is just a pump and dump, and blah, blah, blah. And you don't get that when you're investing in a company like InMode or an established company like Cisco. So you have to recognize that, as I said, not all stocks are created equal, and you don't buy them for the same purpose. You're going to buy some of these penny stocks because you want to be in a position to maybe invest $500 and have it go to $10,000, but you might also be losing your $500. If you invest in a solid company like an InMode, like a Cisco, like AT&T, it's not going to go down to nothing, although you're not going to get the potential explosion necessarily like you would in a penny stock. So you have to know what you're buying and know what the game is. So what I said is, instead of giving you my opinion only, what do we know? So let's look at a factual response, okay? And I say, let's look at the facts. First, the stock is now 70 cents. Then we have the fact that the NFT gallery and the ticketing platform are both released within the last 5 weeks. It might even been less than that. But with that in mind, we're going to go to the third quarter earnings report that we'll get somewhere around the beginning to the middle of November. So now we know that the NFT gallery and the ticket platform cannot show much of anything in the third quarter earnings coming up because they were just released, at the very end of the third quarter, which closed out in September. So will the stock price move? We're talking about Humbl here. And I mentioned in a conversation I had down in Nashville with Brian Foote, I said that, Brian, you tell me if you think I'm wrong, but I don't think the third quarter is going to be that significant for the reason I just said, because we just had those two business lines, the NFT gallery and the ticketing platform, come out right near the end of the third quarter, so they're not going to show up significantly in those numbers, which means we have to go to the fourth quarter to see what kind of sales are we getting from the NFT and the ticketing. Then we get that fourth quarter, and that's 3 months, October, November, December, of those two business lines as well as the ETXs. So we got that. That's one clear quarter of those being available. Then we have to go out to the first quarter of September, January, February, March. Now we're not going to get that first quarter earnings until maybe late April or the middle of May, somewhere in that period. When we have the first quarter of 2022 and can compare it to the fourth quarter of this year, we can have two clean quarters of earnings, and we can look at the first quarter and said, do we see an increase in sales of NFTs? Do we see a significant increase in revenues of the ticket sales? And that will then begin to tell us how Humbl is performing on a revenue basis. In the meantime, the stock might move because we get some news. What could the news be? It could be another acquisition. I don't know this, I'm just speculating. It could be that the peer-to-peer comes out. Again, I don't know that. People think I have insider information. I do not. I do know, on the other hand, that they're doing a beta test that was sent out, and I have heard verbally from some of those people who are part of the Humbl Nation of investors who downloaded that beta test and checked it out, and they said it was working pretty well for them. So that's the last I heard, which was early in the beta test. But we could get some news that come out, and that would also advance Humbl. So, do I think it's going to go to 7? And I say that. So, will we go to $7 a share? And I said to my friend who wrote, I think we will, but I won't say that's going to happen right away. It could be 2022, it could be 2023. What we're waiting for at this time is, as I just said, the firm evidence of revenue growth in those business lines, and that will move the stock price along with some of the news that might come out. And I said, I know it's frustrating that it's a wait, but this is generally why, I don't invest in startups. And you have to understand that if you invest in a startup, you're waiting for the company to get going as compared to investing in a company that is already operating. InMode was operating before it went public. Humbl, on the other hand, didn't exist for practical purposes prior to going public. It went public and then, was a baby coming out of the womb. A lot of times you're having companies that are publicly traded, they were operating profitably for a number of years before they went public. So this is also a difference with Humbl. You bought a SPAC, and so you got it cheap. You're going to have to wait. That's the trade-off. You got to wait for the revenues to start growing. So I said this, going to 7 won't happen overnight, but I would say that we do have an opportunity in Humbl to make some serious money over a 5-year period. And as I said, if you look at it right now, the stock is at 70 cents. If it took 5 years, well, let's just say it took 5 years to go to $7. That would be a lot less than what a lot of people are thinking it's going to do. But if you had an investment today of 70 cents that went to $7 in 5 years, you're going to get 10x your money. That's quite a rate of return in a relatively short amount of time. So at this point, given that Humbl is where it is, I don't see significant downside. Now, I also wanted to respond to on the Twitter comments. There's some people out there, again, some of these people that are offering their opinion. That's fine. It's a free country. I just want to counter some of the things that I hear that I don't agree with. Now, maybe they're right and maybe I'm wrong, but I think I'm right. I don't think, and they're talking about a dilution of the B shares coming in December. I've said this before. I don't think that's going to happen. The people that invested in Humbl and they put the money in so that Brian Foote could get going, they put in a lot of money, and they have a lot of money. They're not going to cash in their shares when the company is, as it is now, at 70 cents. Even when we get to December, where's it going to be? Even if it were a buck, even if it were $1.25, they're not going to be cashing in those shares as cheaply as the stock price is at this time. So, this idea, I'm going to try to counter the idea that we're going to have some dilution coming up in Humbl. I don't think we will, okay, for those reasons. And as I said in closing to him, I said, I know we would all like to see the stock go up in the near term. It would be great if it went up from 70 cents to a $1.25, $1.50. We would all, I think, emotionally feel far more encouraged. But we're going to have to wait for some news. We're going to either have to see the revenues go up, the purchase of a new firm, or peer-to-peer come out, or something else. We need a catalyst, and that's what happens, folks. It's like the video I did today on INMD, where, guess what? We had a catalyst. The earnings went up for the company, just as it did on INMD in the second quarter. They said our revenues are up. Our revenue guidance for the year is up. That was in the second quarter. INMD jumped it again. Their full year guidance for the third quarter, they're now raising, thinking they might hit as much as $347 million in revenue for the year, and the stock price went up accordingly. So that's what we're waiting for with Humbl. It's not dead money. It's not going down to nothing. It's that we're now waiting for what I'm going to call some clean quarters of earnings, as I've already explained, where we can get the fourth quarter compared to the first quarter, where in each quarter we get 3 months of where the company's operating the business lines. And it's taken this long, but I think that what Brian and his team were able to put together in the first year, and we're not even a year old yet. That'll come, depending upon how you look at it, either in December or January. But in the first year, I think they've already done an enormous amount, and they continue to press forward. So lastly, I'll say about Humbl that a lot of people, as I've said before, still don't know about it. Ask the average person on the street if they've heard about it. They haven't. So I think at some point, too, that we are going to get at some point over the next 6 months or so, I would guess, we're going to probably see Humbl do some advertising and raise awareness. All of that's going to come together. So, folks, if you're holding on right now, I can understand you being sad about it. You bought it at a higher price. But for the reasons I just laid out, I think, I would encourage you, if you have a loss down here, to hang on. Or if you want to, what you could do is sell your shares and then wait 30 days and buy them back and take the tax write-off that you have on the initial purchase, and then you could come back and rebuy them at a lower cost basis, and at least therefore have that tax loss. Now, if it goes up in the meantime, you're out of it, but whatever. That's the one other thing. All right, I'm going to close out. Hope you're Good. Thanks. Hope you had a great weekend. Thanks for watching as always. Do subscribe if you haven't, and give me a comment if you would. It's always good to hear from you guys. So until next time, folks, we'll see you later.